Since the beginning of May, gold has dropped over 6% already. So is the decline about to finish? Are we going to see a low relatively soon? Let's have a look at the details, and welcome to myfinancesteacher.org. The last couple of times I looked at gold with the members at myfinancesteacher.org rather than on the YouTube channel was on the 5th of May with this big red candle, when I mentioned that while in the blue scenario, gold might test the all-time high one more time, giving us a bit of a higher high before dropping down into the intermediate cycle low, there was actually a pretty high chance that gold is just gonna continue grinding down into that intermediate cycle low before testing the all-time high. And that was followed by another update on the 16th of May. That's another big red candle over here, where I was fortunate enough to exit the positions in GDX, GDXJ, SLV and so on, except for the longer term positions in some of the most promising junior developers, just before this drop out of this purple descending triangle. And yes, we have a model portfolio at myfinancesteacher.org where I publish all of my trades. By now though, gold is already 41 days into this ongoing daily cycle. Usually these daily cycles last for around a couple of months. So we possibly have 1 or 2, perhaps 3 more weeks within this decline into the cycle low. And what do you know? What is going to happen over the next couple of weeks? To look at that, let's switch to another asset that I often look at when we discuss gold, and that is the dollar index. In a couple of weeks, by mid-June, we are going to have the Fed meeting, which at the moment is expected to raise rates by another 0.25%. So if this expectation of a rate hike doesn't drop much from the current 60-61% chance, the US dollar might still continue pushing higher over the next few days, perhaps to test the 200-day moving average and the recent highs back in early March. So we aren't going to see explosive moves higher in the US dollar, and we do have a couple of red candles already. After all, the daily cycle is already 46 days long, and usually these daily cycles last for just around a couple of months on the dollar as well. Plus, looking at RSI, it's pretty close to overbought already. If dollar didn't turn down today from this most recent top, the most we might expect from the dollar is again just test of this 200-day moving average before dropping down into the daily cycle low and potentially continuing down into the longer-term intermediate cycle low. After all, this intermediate cycle since early February is already 117 days long. Usually these intermediate cycles in the US dollar last for around a half a year, so we're past the midpoint of the duration, meaning that the likelihood is pretty good that it's almost time for the US dollar to drop down not only into this daily cycle low, but also the intermediate cycle low. And while this is bullish for gold, remember that in the very short term, into that FOMC meeting, dollar might still push a little bit higher. Now zooming out from the daily cycles on gold up to the intermediate cycles, this intermediate cycle starting from the beginning of 2022 was very long, unusually long. And back then in the middle of 2022, we were debating whether this low was an intermediate or a daily cycle low. You might argue either way, and while we are trying to be technical looking at the cycles, there is partly some art involved as well. In either case, one way to look at this cycle is this one very long intermediate cycle lasting all the way into late September. So sometimes these intermediate cycles are much longer than the usual duration of half a year, and sometimes, to balance out the averages, they are quite shorter. Perhaps we are observing a couple of shorter than usual intermediate cycles, the previous one lasting for 5 months rather than the usual 6 months. And that brings us to a couple of scenarios for the ongoing intermediate cycle, where one quite likely scenario is that gold continues down into that FOMC meeting into mid-June, into the usual duration of this daily cycle of a couple of months, and that might actually turn out to be our intermediate cycle low as well, giving us again another relatively short intermediate cycle lasting for maybe around 4 months rather than the usual 6 months. And the reason for such a scenario is that the US dollar might actually drop out of bed down into the intermediate cycle low, as I've just mentioned a minute ago. In that case, the next rally for gold is going to be an intermediate cycle rally, where perhaps in the first daily cycle we're going to test some of the recent highs, perhaps the all-time highs, before cooling down into the short-term daily cycle low. This scenario would perhaps have around 45% chance, so it's quite likely. On the other hand, another very likely scenario, I would give it perhaps around 55% chance, is that we're going to see one more bounce into the third daily cycle within the ongoing intermediate cycle in gold, meaning that the upcoming cycle low is only a lower level daily cycle low, to be followed by one more painful drop into the intermediate cycle to test this 200-day moving average before we can rally into a new intermediate cycle. This sort of scenario would perhaps align relatively well with the dollar bouncing one more time from this support zone that we've identified last time, somewhere around 101, before breaking it and going down into that intermediate cycle low, allowing gold to push into a new intermediate cycle rally. In either case though, depending on the price developments over the next few weeks, especially into the FOMC meeting, you might want to start accumulating either into a short-term bounce or an intermediate cycle rally. And of course, for more up-to-date details on these price developments and the actions it might suggest, join us at myfinancesteacher.org. For now though, before you visit my website, make sure to give this video a thumbs up, share it with your friends, and of course, subscribe to the channel. Have a nice day. Bye bye.